Should stock index futures traders focus on second quarter corporate earnings season that kicks off this week?
No, everyone knows that earnings will not be good this quarter, but traders should instead focus on the stimulus from central banks, also from the fiscal stimulus from governments, and I think that is where the influence lies as far as what has supported stock index futures as of late. So the earnings, I think, although very important for individual issues, of course, as it always has been, but for the broad indexes, traders should focus more on other factors, once again, central banks and governments and their stimulus programs.
What is the outlook for copper futures now that they are at the highest level since April 2019?
So the copper market has advanced approximately $1 from when those lows were made. Originally, I did have a chart objective around $2.88. That has been surpassed. Now we are very close to the $3 level. So I think this may be enough on the upside, at least for now. The $3 level is a psychological resistance point. So those of you that are long, I think now's a good time to take some profits. There are no sell indications basically that I'm seeing, but this is apparently enough of a run. So if there is a congestion pattern building or some type of setback, I think a new long position can be established. But for right now, this is a great time to take profits as we get close to that $3 psychological resistance point.
Will silver continue to gain on the gold market?
Well, silver has advanced as of late because of its industrial component influence. So that helped the silver to gain on the gold, although both gold and silver have been very strong lately. Of course, gold is more of a flight to quality vehicle. So I think the answer to this is it really doesn't matter that much if silver gains on gold or gold gains on silver. I think the important thing to remember is that the trend is higher for both precious metals. So I would be long both gold and silver. I think there's a lot left to the upside for the precious metals.
What are the latest U.S. World USDA supply-demand numbers? Is there further impact on demand due to the virus and U.S.-China relations?
On Friday, the USDA put out some new world and U.S. supply and demand numbers. The numbers were pretty much in line with expectations, lowering U.S. corn crop because of lower acres and lowering the 2021 corn carryout. They kept the soybean carryout pretty much unchanged and also in the wheat. The big thing I think right now is that many people feel that the corn carryout here in the U.S. and the soybean carryout is actually going to increase from the USDA numbers due to mostly favorable weather. As far as the impact of the virus, we're continuing to see cases go up, which could reduce restaurant demand and food demand domestically. And we're also seeing a slower economic recovery, which could slow the demand for raw materials. Right now, there's too much supply of many raw materials, including crude and grains.
Grain futures sold off on Friday. Why? What is the latest managed fund net grain position?
Grain futures, especially corn, sold off on Friday because I think many of the managed funds who had added longs because of a weather concern decided to take those longs off just in case the weather changed over the weekend and came in better. During that week, the managed funds were net buyers of 31,000 soybean contracts, putting them long almost 100,000 contracts. And they got out of 60,000 corn contracts, making them short 140,000 contracts. And at one time, their biggest net short position in corn was 330,000 contracts. And I think right now, with the weather forecast the way it is, they might return to selling corn and getting out of the long soybean position.
Is the 2020 U.S. Midwest weather rally over? What should farmers do?
On Friday, there were two different maps about the U.S. weather. Midwest weather looks like now we're going to see rains in South Dakota, Minnesota, Iowa, Illinois, and Wisconsin. The Southwest will remain warm and dry. The 11 to 15 day maps suggest there might be some ridging in that time frame, but reliability of that map is relatively low. During the rally after the June 30th report, the farmer sold a lot of old crop corn, beans, and he sold wheat right off the combine. He still is not a big seller of new crop corn and beans, and I think at least for beans, he should increase cash sales here. There is talk about beans, November beans trading below $8 by the fall. As far as corn is concerned, I know it's below break even, but there is talk that these corn could trade down below $3 by the fall. So maybe increasing some of the cash sales. With the carry in the corn market, it would suggest that many farmers are going to store this year's corn crop. The experience this year is those that sold early came out better than those that stored last year's harvest into this summer.